Good evening, everybody. Okay. All right. Hope everybody's having a good summer evening. We're going to have, this one's going to be relatively short because I've got to, as soon as I get done, I'm going to have to start breaking down this computer to get it hauled up to Keuka Lake. So we will try to get as much in as we can. But I am guessing by 9 o'clock we will have to shut everything down. So we will get started. What we can visually analyze is that kind of when they went through this upper part of the trend channel the other day, it looked like the Dow had the possibility of pulling this, or pulling the market up, that they'd broken through, and that we could possibly be heading up here to recent highs. Then it started pulling back, which wouldn't have been unusual had it pulled back right to this level. To use the resistance no chart. All right. Bill, the chart's up. You might have to fool around with getting your charts up and running. So what's happened is that when they've come back into this trading range, it basically told us they didn't come out of the trading range. They may have had a day of spurt up there, but came back out. And why we kept, okay, we'll be here, Bill. Why this wasn't where we were saying cover the shorts and headlong. We were still saying be nimble because we weren't getting full confirmation on the NASDAQ. The NASDAQ, you could pretty much kind of draw a trend line right down through here. The NASDAQ wasn't getting up through that level, and it started failing. So we may still be in this downward trend, but that was why when the Dow was up through that trend channel, that it didn't have the full strength that we would have liked, because the NASDAQ hadn't broken out into new territory. This puts us back into the middle of the trend channel, which now gives us the possibility that they can bring it down back into this range. But we might be in a situation where the bottoms might be slowly curling up, but it's still going to be, the key word here is slow. We may be just in a choppy market. You got to remember, we're in the middle, smack dab in the middle of the summer right now. So, and we've got all this garbage going on over in Europe. So people aren't real anxious to full glory at this point. The S&P 500, same scenario. It couldn't get back up above this trend channel, and we're right smack dab back in it. So they could bring the S&P back down to the 500 and still be right here in this channel. Yeah, higher lows, but it's doing it in a very, as we can see, it takes 3, 4, 5 days to get up, 3, 4, 5 days to get down, 3, 4, 5 days to get up, 3, 4, 5, 6 days to get back down again. Nothing is forcing anything out there. Interest rates, just, I mean, this is your bond prices. They aren't going anywhere. They're just staying high. Yields down low. Crude oil prices, I think it might be still on its way down. kicker signal started the uptrend, and then you had your, this is actually a harami, but it's called a homing pigeon, where they're both the same color. It just basically tells you that the buying has stopped. Then they gapped it down. Now you're kind of slow, have the slow rollover, which is very effective for getting ready to start blasting things to the downside. Let's see, we are in a pattern that looks to go lower before higher. I think so, yes. When you've had a failure up here at the top, you've got a sell signal. You had a close more than halfway down this candle. You have a close below the T line, and your stochastic's rolling over. I would think we're hitting the 50 before we break through. On the NASDAQ, same scenario. When it's failed this level right here, we got a left-right combo, little shooting star. Now we're below the T line. Even though we had a positive day today as far as where it opened, stochastics are starting to roll over. I would think we're going to hit the 200 before they blast out through the top side. Would you consider this trend channel to be a possible bear flag from the April, May highs? Not so, yeah, let's see. Because you had a couple channels in here. You had this channel, and now you're having this channel. Yeah, I don't know what you really want to call it, but with the ability to see what it does at the bottoms and the tops, we can see if they break this to the downside, obviously, or if they bounce back up, whether they break this level. So right now, I wouldn't be too concerned one way or the other that there's going to be any major price movement. That's why we've been still holding short positions as well as long positions during this time frame. Because I guess if you just break it down to the very basics, which way is this market moving? It's just sideways. That's right. Every 5 to 8 days signal. Look at all the candlestick signals that we have had the chance to take advantage of with the NASDAQ. Let's see. Yeah, once you see the where the trend is, this is exactly why you can see very clearly what happens once it gets to that resistance level, or what happens when you get down here to the support level. Yeah, if we break the June lows, obviously, yeah, there's been a change of investor sentiment. So, yeah, so we might, again, might be pulling back until we hit a support level and start back up again. Okay. All right, let's see what else. We got crude. Did we do crude oil? Crude oil, I think crude oil is rolling over. And when you ever see these little rollovers, that means the acceleration is usually picks up pretty quick to the downside. The dollar, slow uptrend, as you can see, but it's not in any hurry to go anywhere. Let's see. I guess we could probably see this somewhere clearly on this type of chart. We're just kind of junky in here for the last couple months. Not anything that you'd want to pick up a trade on, but look, the trend was very easy to follow. A left-right combo brings it down until you head the Morningstar type signal. A pullback crunch, but held at the 50. Then you're bearish engulfing. Now you're back to the 20. Bearish engulfing again brings you back down, and you get indecisive trading. So it's not a bad trader. It's just that you got to realize you're trading in and out. Yeah, I think that's what will happen with crude oil. If we are starting to run into a second recession or the second half of a recession, and things slow down with all that crude oil, there's a lot of crude oil slopping around out there. If they ever break the price, I don't think there's any big stretching of the imagination to see $60 a barrel, possibly even as low as $50 a barrel. Yes, and this is probably too much information. The new technology for drilling for oil is just expanding rapidly. You don't see as many dry holes as you used to. Now the problem is hitting a hole where the production is good enough, and especially in the eastern part of the United States, where they're just hitting natural gas left and right every time they poke a hole in the ground. I don't know what heating oil. Running somewhat the same as crude oil. Anyways, what else do we have to look at out there? The only things that seem to be moving dramatically are the grains. Notice this was just a perfect trade so far on soybeans, where fry pan bottom breakout had a good run until the big bearish engulfing. Now it's kind of moving sideways. Same thing with corn. When you start seeing all these programs, CNBC show how terrible the drought is, and corn crops are going to be bad, and prices should go skyrocketing higher, that usually means you've gotten to the top. Oh, I didn't do the metals. Or did I? Gold, just absolutely sideways. Same with silver. Caught in these sideways channels. To ask me what price would be a good place to be buying corn, I have no idea. No, I wouldn't be buying corn there unless it was some sort of Fibonacci number. There's nothing there. Here's where you get back to your 61% retrace, or your 38% retracement, your 50% retracement, and your 62% retracement. So, I mean, they could drop all the way back to those levels. There is a wee little teeny gap right here at that level. Yes, I would short corn. But I think it'd probably just be a pullback until they saw what the true. Let's see, I'm trying to get back to. Okay, so anyways, so that's what's happening when you start seeing all the news broadcasts saying how terrible the drought is. That, as a matter of fact, they just had a clip on CNBC here, or on Fox News, just about 30 minutes ago, about how bad the drought was. So that usually tells me we've hit a top. I have shorted hogs because it looked like it was in a channel, and even if it's in a channel, it looks like it's still got some more downside to hit the bottom of that channel. Stochastics tell me there's some more downside. On the other hand, live cattle is doing a little morning star right here on the T-line, and it's trading positive after hours. They could be ready to pop live cattle to the upside, and then feeder cattle starting to come up slowly. So anyways, trying to think of what else do we usually look at. We've done the, well, all right. So let's go to the, let's see, cocoa. Now, cocoa's still in a nice little steady uptrend. I wouldn't be shorting this just yet. Sugar. Now, sugar I might be more apt to short. Notice again how it's failed here at the T-line. Notice this is what signal you always want to pay attention to. If you're in a downtrend and you see this hammer signal, what should we see after a hammer signal? We should see bullish confirmation. If they open it lower, you want to short immediately because that tells us that the bulls that tried to move it back up couldn't. The bears are still in control. How about coffee? Thanks, Lena, but I just had dinner. I love using that line. Coffee, stay short until you see a buy signal. Now, notice where your stochastics are, and notice where your 50 is. So you just have to be much more diligent to see if they hold here at the 50. Okay. All right. The other day we recommended Smart Balance because it had just come up through the T line with after some dojis. Bought it here, held on to it as long as it didn't close below the T line, and then today I guess the earnings were pretty good. Moved it up nicely. I think you're in wave 1, wave 2, still in wave 3. SEM is one that we've held in the account until right here. We closed it out, had to buy it back higher with it gapping back up, and this is your typical. That when you see that gap up doji above the open of the previous day, you want to buy at least some, and if it opens positive the next day like it did today, that tells you got that little flutter kicker, you've still got some more upside. No, MELI, which we're going to get to, they had good earnings, so they're trading up here. Now, this is the exact reason why we bought the spread instead of buying the stock, or we bought a put spread because we didn't have a whole lot of money. Now it's up here in the $75 area, so we're going to lose the option money. And another one that they were showing here in the chat room this afternoon is MITK. Also had a nice little kind of cradle pattern, but it was a bullish Hiromi followed by a gap up. That anytime you see a candlestick reversal signal followed by a gap up, especially if you're in the oversold area, the probabilities are extremely good that you're now in an uptrend. And that confirms as long as you don't close back below the T line. So this one has worked out nicely. I wouldn't doubt that this one is now, this has done the typical. Come up through the 50, eventually came back, tested the 50 again, came up. Next target right now is the 200-day moving average. And the IOC has been working out well ever since this little rounding bottom. As long as they can't close it below the T line, you continue to hold this one. CALL, another one that has been moving up nicely. Now notice when it came back below the T line, you could have either gotten out or you needed to see something decisive, and there wasn't really anything decisive in here to push you out. But even if you close it out, you would buy it back on the gap up above the T line, because what does that tell you? It tells you they're back above the T line, and they're pretty much in the same trajectory they were before they had this little profit-taking pullback. And by the time they do gap it up, you can pretty much tell it was profit-taking, because there's really nothing that shows you any decisive or any convincing sell signals in there. HNT. This is where you kind of want to get your eyes set for anticipation of a pattern. What type of pattern does this look like it's setting up for? Cradle pattern, exactly. So here's one where you might just set your stop up here at 23, if this is 23. But if it comes up through there, up through the T line, you want to be be getting into it. Oh, let's see, get that. ONXX. There's another reason, again, why on these bigger stocks, I'd rather do the call spreads. What's happening here? But this looked nice, but now we've come back down through and had to close this position out. However, did some buying, or looked like they started buying again here. If this comes back up above the T line, we'll be buying it back in again. All right, GMCR. Same scenario. When you see that long flat trading, pick a spot. Now, some people could have been gotten in yesterday when it came up and then came back off. This is, to me, still a cradle pattern with an inverted hammer gap up. This one's going much higher. Let's see, SN. Whenever you see a big signal, now this isn't what I'd call a pure cradle pattern. Here's the cradle pattern. Here's a flat end of a cradle pattern. But when you get a big, huge signal like this, probably got in I was reading Marsh's. Well, when you see a big move like this, that means there's usually going to be a lot more to follow. So I wouldn't doubt they can't take this right up and fill this gap going to the 200. Yeah, FSLR was exactly the next one. First Solar had a nice little pattern breakout. And it is demonstrating more of the fry pan bottom. In this case, kind of a double fry pan bottom. With a kicker signal that broke through this level, tells us there's probably going to be a lot more upside. If you're buying this one, just simply use a close below the open of this candle as your stop. The probabilities are you're going higher. Yes, there was a definite sell signal on TXP. I'm sorry, TPX. Which told us that once they got to the 50, they failed here. It was time to get out today when it closed back below the T line. Doesn't mean they're out for the count. If they come back up and do a cup and handle type, coming up back up above the T line, you want to be buying back in. Let's see, YELP, kicker signal. Would be buying on strength on this one using the T line. Tom, I'll get to tonight. We're not going to be doing a session very late, but I'm probably going to get to all the ones that everybody would be asking about. So just hang on. We'll get to them. CHMT. Another kicker signal. Now, this one did break through the downtrending channel. I wouldn't be afraid to be buying this one. This one's a very good-looking chart. TSO. There's that doji gap up. More than likely, you're going to have a 45-degree come off of here, which would probably be equivalent to the trajectory of the original trend. So if you buy this, use the halfway point of this candle as your stop. But again, you've got a doji gap up. Those are still your best friends, especially when your stochastics aren't in the overbought area. Tom, the ones that I'm doing right now are the ones that I've gone through the scans that I do and usually come up with what I think are good, attractive setups. But also I've got setups in here that are good illustrations of different type of patterns and the logic between or why some of these signals are good. So right now, notice what we have here. We have a fry pan bottom. Now we have a kicker signal coming out the other end, kind of a scoop fry pan bottom, kicker signal through the 50, I'm thinking this one can get up to the 200 very quickly. If it breaks the 200, then you've got this gap to fill. Okay. When will you be on the web tomorrow? Tomorrow, let's see. I'm going to try to pack up the computer tonight. But if I pack everything out, I've got the 30-inch screen and two 24-inch screens, from my water skiing. So maybe I'll be on first thing in the morning, and then packing everything up after that. More than likely, you won't see me after tomorrow afternoon. We'll be still driving. But I will be on. I mean, I'm going to have the full computer up there at the lake, so I'll probably be on quite often at the lake, just not at the same time length. We might be on for 10 minutes instead of like the 45 minutes we do in the morning. Okay, let's see. RFP. This is again, that example, when they gap it up and do a doji, you want to see them open up positive the next day. That tells you the bulls and the bears have won after the profit taking, and they're still going to move in this direction. So that one's still a good one. And let's see, did we just do Newport? Yes, we did Newport. All right, who wrote this one? Oh, okay. All right, so this one, you do the same thing. If it opens positive, you want to be buying it. Which one did we just look at? Oh, well, anyway, we just looked at one that did the same thing. It opened positive after that gap up doji. STE, another one, inverted hammer, bullish confirmation. That gap up from the inverted hammer is usually a very, very strong indicator. Look for this to go much higher. And GGC. GGC gapped up. As you can see, it hasn't sold off any. Came right back to the T-line. Now you have kind of that little Morningstar type signal. This is where you can start buying. That Morningstar signal told you the indecision was over. You've now got a candlestick buy signal in there. And OREX is one just to keep an eye on. You're right back down almost to a support level with a doji. If it opens positive, you can start buying and just watch what it does once it gets to the T-line. All right. Now, those are the potential longs. Now, notice how this was a good uptrend right until where? Till they had a gap up doji and a left-right combo. Stop the uptrend. So anytime you see this strong signal, remember, the signal is much more important than any other confirming indicator. You want to be out, or if you see a left-right combo, you probably want to be out of most of it. The worst-case scenario is, now that you're in an overbought condition and you're starting to see sell signals, if you sell half the position and it keeps going up, at least you're in a half a position in a high-risk area, but you're still making some money. All right, some of the shorts. AMED. Let's see. This is your bearish J-hook. This one can be shorted, especially if it comes back down through the low of today. That tells you you're coming down into the 10, 9.5 area. We shorted Fun the other day because you had started some selling, it closed below the T-line, it popped it back up, had a sell signal. This is the most perfect entry strategy that you can use. When you see a doji right on the T-line and stochastics heading down, all you have to do is see them trading it back below the T-line, and you'll have confirmation of which way they're taking it after a doji and down through the T-line. That's usually going to start a very good downtrend for you. OSUR, we've been short for quite a while, ever since the shooting star gap down. Notice what it didn't do. It didn't get up through the T-line. So even if you took some profits here, you could always reshort it once you saw it didn't come through the T-line. We're still short this one. Looking for it to close now below the 200. If it does, they're bringing it down to this level for the next test. In Asia, we've been short this one for a little bit because it kept failing at the T-line. This one you stay short until you see a buy signal and a close above the T-line. ARO, this is why when you see something close below the T-line, start going short, or at least be out of your long positions, because the probabilities of something like this is going to be much greater of happening. So if this were the case where you closed it, or at least if you thought I'll give it one more day and it closes here, you want to be out of the position. If you closed it here and then you saw it close again here, you might be shorting it at this point, anticipating a good move to the downside. Remember, all we're trying to do is find the signals that are telling us that there's investor sentiment is dropping or going south on these. Here's a case where INCY came up today, but at the end of the day, it was coming back down as a shooting, or not today, yesterday. It closed right on the T-line doing a shooting star, which told us they failed again up here. That's the time to start thinking about at least about a half a position ready to go short. And if it opens lower the next day, you short, unless it takes a big 20% drop, then you might be taking profits. Abercrombie Fitch closed below the T-line. You have a doji. I'm thinking they're taking this one down. They're down below the support level on a gap down from a doji. If this opens lower tomorrow, very easy. Lots of stochastics to the downside yet. You want to be going short. Remember, these are just kind of clear messages that things are rolling over, and then we're seeing sell signals. Those are the places where you're going to get a lot of energy to the downside, because remember, where do people sell? They panic sell at the bottom, and that's after things have started to roll over. Here is our ROSG. We had long this a while ago, but now it's rolling back down, probably heading back down to where it started from, which would still be a significant drop percentage-wise. RIDM. Iridium. Is Iridium the one that had the cell phone years ago that you could make calls from anywhere in the world? All right. I remember this when I was SOS trading back in 1999, year 2000. Iridium went from 60 down to 6 because there was big fear that Motorola would not cover their expenses or keep them financed, and they were going, I thought, into bankruptcy. But at $6, they did a bullish engulfing signal on the rumor that the Motorola was going to refinance them. So in, I think it was 4 or 5 days, it ran from 6 to 14. We did a shooting star. We took our profits, and 4 or 5 more days later was back down to 2 because Motorola did come out and say they weren't going to fund them. But that was to illustrate that when investor sentiment tells you which way things are going, and when you see the signals that tell you that's not, you get right back out. Another case where if you start seeing a failure and seeing sell signals, if they gap it down, you want to start shorting it. Are you always going to get a move like this? No, but if you get into something like this, the probabilities of being in the right direction are greatly in your favor. That could be true, yep. That was just a mere dozen years ago. Whoops, that's not whatever I wanted to type that. I wanted to type it over here. Bearish engulfing, gap down. This one you can still be short because you're now in wave 1, wave 2, gap down wave 3. They could take this one down a lot lower. BOIL, boil, natural gas. Doji, gap down. They're taking this one down. Navistar. Doji, gap down. Somebody was asking today, 30 pounds, so 30 pounds, I'd probably about 130 pounds in my case. Desi, we'll get to the big ones here in a little bit. Oh yeah, I don't know how many ENT cars. This one's still going lower. I think you could probably draw your trend channel down through here. You're probably heading down into the $12, $15 area. WTW. Bearish engulfing, failure at the 50, shooting star, bearish engulfing. This, in a case like this, if you see it in time, you're either short or getting ready to go short. Now you have that gap down. Makes it very simple. If they open this lower tomorrow, you want to be short, or you want to start shorting. UBNT, which looked good a few days ago, failed at the 50. And it's done kind of an evening star. This one you want to be shorting on any weakness tomorrow. Leapfrog got whacked. There's your bearish Harami, your doji, your gap down. They tried to bring it back up, but if they open it lower, they'll start taking this down further, probably all the way down to the 200. I'll be there. Hold on. I'll be there in a minute. Let's see. Another one. There. Notice a little rollover. Shooting star, gap down. They're probably still selling this one off. And PDCE. Left-right combo. Breaking down through this level. Look for this to be a good, at least a 10% move to the downside, possibly even more. FCN. That rollover. This is what you want to keep your eye on. These rollovers usually act like a little slingshot effect to the downside. Remember, when that investor sentiment starts building up to the downside, they get out of these things quickly and give you some good short positions. Gap up, hanging man, doji, hanging man, bearish confirmation. Look for this one to come at least back to the 200. And BODY. This one is probably going to be recommended tomorrow for that very same reason. That you've had this kind of slow rollover. They could take this from wherever this is, 950, back down to 7, or at least back down to 8. whatever that is percentage-wise, about a 20% move. Avon, notice how it's supported in here. Anytime you see them breaking down through a support level, you've got wave 1, wave 2, wave 3 going on. I wouldn't be afraid to be short in Avon products. CIE, big shooting star, doji, gap down. That tells you they've failed. Look for this one to come back down at least to the 200. ROSE, body down big after hours. All right, maybe already too late. Another one that with a doji right on the T line, they open it lower. You want to start shorting immediately because they're going to move it in the direction of how they open it. That's your perfect entry strategy, is using the doji right on the T line and seeing which way your stochastics are going. Let's see, what did I just do? Rose, all right. ESI. It's not the right ESI. Oh, this is for that example. When they roll it over, they gap them down, this is what you kind of expect. Or not expect, what you hope for. But notice where they gap this down, below the support level. Let's see, we did have TPX on here. Yeah, this one you can start shorting if there's weakness tomorrow. If it doesn't see a lot of weakness, that means it's just going to kind of ride the 50 until the next buy signal. VNR, Hanging Man, Doji, gap down. They're taking this one down further. Where? Do not know. But that's a lot of force coming out of that trade. And OSIR, which looked good the other day and then turned right around and failed, is still in that downtrend. That's why we were saying when it opened up the next day, it needed to close higher. When it closed here, be out of the position. Do you wait for the close of the next candle when dropping through the T line after a doji, or do you short or sell if already long when it starts through the T line right after the doji during the day? If I see a doji, remember the signal is the most important element. And if it's a doji and it opens lower after and stochastics are heading down, I'll short immediately. I'll short on the open. Short theme seems to be consumer discretionary. Hints of what may be ahead for the economy. Yeah, but Fred noticed also that even though we're selling things off, we're still holding up market-wise. All right, that was a good short, Roger. Just below the T line, because that told you again that after a Hanging Man, stochastics heading back down, which was partly due to today. Yeah, that was a good time to be shorting. And Dean Foods, which looks like it had supported on the 200, when it got to the T line, knows what happened. It failed. So if this is wave 1, this is wave 2. Wave 3 may have a good percentage move yet to the downside. Notice how effective the T line works on this trade. We bought it somewhere in here knowing that the rounding bottom was going to give us a move, stayed in it all the way up here until it closed below the T line. In this case, we actually used the lows of the previous Tuesdays because the logic was that if things were starting to roll over, if they didn't open this positive and take it positive, and they could bring it back down through here, that was enough to tell us that there was enough selling going on. We wanted to be out of the position. Now, to be short, may not have been clever enough to catch that. But this was a case where probably it could have been shorted and covered right here and now reshorted with, or at least reshort this on a lower open tomorrow. Let's see. I thought we did look at BPI. BPI, you stay with. It did a little doji above. Where did I have BPI? Oh, way over there. I missed it. If this opens positive tomorrow, you can be buying. Just use the T line as your stop. That's right. That's right. That's all right. We're in here to learn. YOKU. Notice what that might be forming. That bearish J hook. So if this is 8 points from here, it could take you down to the $9 area. And I think I've got a little star next to Yoku. And NFX. Another one is just now rolling over. This little rolling over is very informative. Notice when you close below the T, let's make this real small so we can't see it. Close below the T line. Then they did a doji, which they couldn't get back up through the T line. Then they gap it down again today, all telling us that this is now the sellers are in control. Usually going to head down a lot more. Wasn't VNR affected greatly by the automated trading issue by that one company? Do you use news at all when the day trade combined with signals? No. Tom, usually the news in the signal. Desi, which one does it have to close below the 50? So I'm not trading news unless I see the news beforehand. And if I see XYZ has extra great earnings and they're gapping it up, and I can figure out, let's just take this one. NFX announces they got great earnings, and tomorrow they're opening up here. I'm buying immediately because what's that going to create? That's going to create some sort of kicker signal. If it's something out there that's being built into the news, that news usually the people in the know are going to know about it before anything's announced, and you'll see that built into the price. If you wait for the news, you'll be late. Yes. A lot of buy on rumors, sell on news. All right. What was NFX? Oh. Does it have to close below the 50? No. No, this is your signal right here, especially with a doji gap down, stochastic still heading down. 50 doesn't really mean anything. It's a possibility, but again, the signal and the pattern is your criteria. So during the after-hour news affects your trading, otherwise just candles. Well, it will affect the news. I'm not going to be trading after hours, but let's say after hours that they had good earnings and they're going to open it up tomorrow here. Yeah, that's part of the decision-making process. Was it Kunar? All right, we're going to. Kunar did email me his phone number. We're going to snaggle Kunar in for one of these sessions to just have him give us some pointers of what he does with his day trading. So that's worked out nicely. Nothing. That's a good pattern. Buy signal in the oversold area. Any pullback is right to the T line, then your Morningstar signal. We're going to try to get that set up. Maybe we'll do it while I'm up at the lake. So sometime here in the next week or two. Would you even consider KNG? I don't know what KNG is. That's okay. Few that everybody's watching. Netflix. Still in a downtrend. I would still be looking at the 50-45 put spread. I think that was $1.40 over the last couple of days. Google. This one you stay long as it stays above the T line. Now you did have that shooting star type formation. If it opens lower and trades below the T line, you're out of the position. Apple. Got that stoop type pattern, and it's still holding above the T line. So very simple rule. As long as it stays above the T line, you stay with it. Let's see. QLogic. Well, Shazam. Belt hold. Wouldn't be doing anything with it until I see another buy signal. Right now, it's still in this same trajectory. Now, that doesn't dissipate this signal, but the signal may be confirmed another 3 days from now, another week from now, with another buy signal. This basically, as long as they don't get through the halfway point of this candle, tells you that was the bottom. T-line, yes, is the 8 exponential moving average. We're just getting to Bidu right now. Bidu, a little shooting star. If this one opened lower tomorrow and the market opened lower, I'd probably take my profits. But I watch to see what it does once it gets to the T-line. If it stays above the T-line, you're still all right. And Amazon, I know they're selling my books like crazy. They should be skyrocketing. Pulled back. Doji right here on the T-line makes it very simple. They're going to move it in the direction of how they open it. Okay, I hate to, why is that a belt hold if it didn't get into the price action of the previous price level? Because it basically is telling you kind of the same thing. What was that on? QLogic? What the heck? That's done. That you opened and you came down. The second day brought it right back up into the price range. That to me, that's a belt hold. They brought it right back up again. That's a good looking chart right there on. Oh, that's Nation Star Mortgage. I thought that was National Semiconductor. That's a good looking chart. Okay, I've got to run. I've got guests here. We've got to get things packed up. So I will be back on Monday morning. I might be here tomorrow morning to see what the market looks like it's doing. But we will be in touch. We'll have the screens up the whole time we're up at the lake. We'll just happen to be looking at the lake and the screens at the same time. So everybody have a good evening. Thank you for showing up tonight. We'll see everybody in the chat rooms.